us now is New York Stock Exchange Vice Chairman John Tuttle. John, good to see you. Good to see the stock exchange floor behind you as well.
Yeah, it's great to be back on the home field.
John, so tell us, what is the latest amendment that you're making to this process, which has kind of been ongoing for a while now, and why did the SEC kind of keep rejecting the precise details of what you submitted?
Yeah, today was a meaningful step forward in providing a new opportunity for companies to come to market. As you know, for over 3 years, we were working on the direct listing, which allowed companies to come to the market without capital raising at the time of their listing. And following Spotify and Slack's successful transactions, there was a strong demand from the marketplace, market participants, to see if we could take the direct listing and add a capital raising component with it. So at the tail end of last year, we filed with the SEC, and we've been working with a lot of those stakeholders to really fine-tune what a direct listing with a capital raise would look like. We submitted that to the SEC today, and we're excited for it to advance.
What's the difference, John, for an individual investor sitting at home buying into a direct listing versus a normal IPO?
Yeah, really good question. And in a traditional IPO, a company goes out and markets its shares to investors and prices those the night before. And what you see behind me on the floor of the New York Stock Exchange is really the opening of trading, secondary trading for the company. In a direct listing, those shares, when the company sells them, are priced off the opening trade on the New York Stock Exchange. So for an investor, you could argue that this could be a more efficient way of pricing an IPO. For a company, it's more efficient, and it's another option for companies considering the capital markets.
So if this all proceeds as you're hoping it will, John, will investment banks have a big reason to worry?
I don't think so, because investment banks have played a role in an IPO. They played a very important role in direct listings, and they'll continue to play a role in these transactions.
How is the IPO pipeline, John? We've seen some new names actually coming to market. We know you're working on Albertsons. How different is it right now versus where it would normally be if we weren't in a pandemic and recession and crisis?
Yeah, there's certainly a strong pipeline of companies that are coming to market. You know, there's the old adage that investors like quality companies and allow them to come public in any marketplace. And what you're seeing is larger transactions come to market during this time period. We're continuing to see a really robust pipeline all the way through the election. And it had started off as just being SPACs or special purpose acquisition companies, followed by healthcare companies. But we're really seeing more sectors look to tap into the equity markets in the second half of this year.
John, give us an update of state of play there at the floor of the exchange. I'm certainly missing being there, but you back up to full speed now, other than the CNBC presence, of course?
Well, we've been very focused on bringing the building back online. As you remember, we temporarily shifted to purely electronic trading back in March. And we have been working closely with federal, state, local officials, public health experts like Dr. Scott Gottlieb, and put in place a thoughtful and methodical plan for reopening. So we had phase one just after Memorial Day. Phase two kicked off last week, where we brought more personnel into the building. And we'll continue to monitor events and look forward to bringing more people back and being back at 100%.